Yo, what is up, guys? Bradley Walker here, coming at you with part 7 of our educational playlist. We got one more video to go. If this is your 7th video that you've watched the whole way through, we definitely appreciate you guys taking the time to stay along on this journey with us. If this is the first video that you were seeing, definitely go back and watch the previous videos as well as some other content on our YouTube channel. Be sure to like, comment, subscribe. Definitely check out the links in the description and the links in the bio. And make sure, guys, we have a lot of content coming: free courses, Discord, paid courses, one-on-one trading sessions. I know I say this in like every video, but it's definitely important, guys. A lot of fire is coming, so definitely stay tuned. We're going to break down in part 7 today: is Forex trading better than stock trading? This is obviously going to be a matter of opinion. Some people will definitely disagree with us, some will agree, but we're going to go basically try to be as transparent as possible and just break the two down and tell you why we think that Forex trading is overall a better opportunity.
All right, guys, like Brad says, of course, this is our opinion. But something I really love about Forex is that you can make money on the downside. Like if you have stocks or even cryptocurrency, but here we're talking about stocks. If you buy, say, I think Brad has an example of Amazon that he's going to go into a little bit more, but it's at $3,100 right now. If it drops $500, you're not going to make money from buying that Amazon stock. But with Forex, you can make money on the way down. On the brokerage Hugo's way, this isn't any type of ad for it or sponsorship, just an example of a brokerage that I know of that also has stocks, like a Forex version of stocks. So you can actually do a sell order on Amazon or a sell order on Tesla. But normal stocks like in Robinhood or any of these companies, Stash, Acorns, you can buy stocks, but you're not going to make money from the stock, going down or losing value. So
right.
That's something great about Forex, I would say.
Yeah, nobody's going to buy Amazon stock at $3,100 and walk up to their buddy and be like, yo, man, I just bought Amazon stock today. I'm hoping this shit hits $2,900 by the end of the day. I'll make so much money. The friend's going to be like, dude, that's not how that shit works. But in the foreign exchange market, you can literally profit off of either direction. So let's just, instead of Amazon, let's just say gold. Or like Seven was saying, on certain brokerages, they allow you to trade within the foreign exchange market, the exchange rate of these stocks. But let's just use gold as an example. If it's sitting at 1740, you would think typically when you buy something, you are hoping that the value increases, which it's the same in foreign exchange. However, you can sell, which we've touched on in previous videos, where you're actually essentially buying, but on the downside. So if you flip the chart upside down, essentially, you're buying on that downside. So you can actually profit from both the rise and the fall of the foreign exchange markets. And on top of that, the liquidity and volume within the Forex market dominates the stock market or any other market. As of 2013, I believe it was, on average, there's about $169 billion traded daily in the stock market as far as volume goes. In the foreign exchange market, it's $5 trillion daily. People are exchanging goods across borders from country to country. There's so many different things that are happening globally and on a global scale that the Forex markets just by nature are so much more liquid, and there's so much more volume. But that volume can also then, and that liquidity also can create a very volatile trading environment. So you definitely have to have a proper trading profile, have proper risk management, make sure that you know what you're doing. That's why we're coming out with some courses and a lot of other content for you guys to help you avoid some of the mistakes that we've made. That way you can have a higher likelihood of being profitable. I won't say that you definitely will make money by following us, but all we're trying to do is help you increase those odds, because the average Forex trader, I forget what the exact statistic is, but it's something like 8 out of 10, 9 out of 10 traders are still losing money, guys. So most people are not profiting. They're constantly trading on a daily basis, losing money. All we are trying to do is give you guys some education, some content to help you avoid some of those same mistakes that we've made.
All right, Brad's going to bring up a document or just a web page about some people who have made great returns in Forex. They could have done this in stocks as well, but these are Forex trades that were probably in much shorter time frames. Typically, people don't do long-term foreign exchange trades, but some people do, because we'll explain in our free course about swaps and spread in trading, but that's a little bit more advanced topics. But we are going to show you guys people who have made hundreds of millions, even billions of dollars in one foreign exchange trade. So this can kind of shows why we say Forex is better than stocks, just because of this time, and the opportunities to make money are just much more frequent. So
right. Like, think of that GameStop thing that happened. Everybody saw GameStop blowing up on the news with the Reddit page. People were trading on Robinhood, and then Robinhood and some of these so-called brokerages were shutting people down, blocking their access to trade these things. Imagine if there was moves like that every single day. In the stock market, if you find a stock that goes up 50%, 100%, hell, even 20 to 30% in a day, that is absolutely insane. But there's currency pairs that are moving so fast due to the intense and mass size of liquidity and volume within the market that you have moves like that happening every single day. We're going to show you guys some examples of people who have benefited from that liquidity. We can definitely talk more in depth about ourselves benefiting from this as well, but we just personally feel that based on everything we've discussed today, that the foreign exchange market is a better opportunity overall, as long as you have the right trading plan and risk management profile backing you. So we're going to switch over here now and show you guys some of this stuff. All right, guys, so we're going to give you a few examples of people who have benefited from the liquidity and the volume within the foreign exchange markets. Both of these guys have worked together. I'm sure you haven't heard of the first guy, Stanley Druckenmiller, but I'm sure you guys have definitely heard, I think I said Druckenmiller, it's Druckenmiller, I apologize. Hopefully he doesn't see this and get offended. I highly doubt he will, but anyways, you guys have probably heard of the second guy, George Soros. He's definitely been in the news. We have nothing to say about other things that he's involved in, but we definitely have to look at and admire his success and profitability within the foreign exchange market. So both of these guys have definitely taken advantage of that. You can see a $2 billion with a B, $2 billion trade on one pair. And you can see here, it says he went long on the German mark because of the fall of the Berlin Wall and the undervaluation that was going on during the reunification between East and West Germany. Legend has it that Stanley initially bet a few $100 million until Soros told him to raise the bet to $2 billion. It's a company that they had called Quantum Fund brought in roughly 60% returns within that year. Absolutely insane. And you can see here that it credits Soros for having him increase that. And Soros also having one of the biggest trades in Forex history, $1 billion. He shorted the pound. And this is what we were talking about. He shorted the pound, which is essentially selling or buying on the way down as the markets are going down. So he shorted on the pound aggressively. Some people say that he helped crash the pound when he actually invested in this, but he made $1 billion off of another economy doing bad. I know that may sound horrible to a lot of people, but we're just trying to give you guys examples to put things into perspective on what is possible.
All right, guys, we are going to bring up just one last page here just to further hammer in our point about Forex versus stocks. Still great opportunities in both. No, disrespect to anyone who does either. It's amazing that you're investing at all and in these financial markets, but here's just another example here, and Brad's going to go over it.
Definitely. So we're putting this up here, guys, just to give you guys a visual representation. So if you guys do want to take notes, if you guys want to take away anything from this, you can definitely see it for yourself here. So like we talked about, the large volume that the Forex market has versus the stock market. So $5 trillion per day in the foreign exchange market. We're looking at less volume within the stock market at roughly 200 billion. The high liquidity within the foreign exchange market versus a lot less liquid market conditions within the stock market, which again, we've talked about having GameStop opportunities happening every single day. That's basically what is happening within the foreign exchange markets. And there's hundreds of different pairs that you can trade depending on the brokerage that you're a part of. The Forex market also has 24-hour-a-day markets. So when the markets open at roughly, depending on the time of year, 5 p.m. or 6 p.m. on Sunday, they are open until roughly between 4 and 6 p.m. on Saturday, on Friday. I mean, depending on the brokerage that you have and depending on the time of year, it definitely changes with daylight savings times and things. But versus the stock market that has an 8-hour per day market cap, can't trade after hours. I know some brokerages are putting things into place where they're allowing people to trade after hours, but for the most part, it is not very common within the stock market. Minimal or no commissions in the foreign exchange market. So there's a bunch of different ways that you can set up a brokerage account. There's different types like ECN and a lot of other types that you can set up different Forex accounts. So the stock market is typically requiring commissions. And if you look at Robinhood, for example, someone who isn't charging any commissions, look what happens, guys. You aren't paying these people for their service. They are charging you ridiculous prices at times for stocks if you compare it to other companies. They're kind of making money in that sense, but they're not charging you commissions. That's why they shut down trading. They can't even fund the stuff that people are investing in because they're not charging you anything to use it. So sometimes it is better to go into something in stocks, for example, where you're actually paying a commission on it. In Forex, there's minimal or no commissions. You could be paying on your spread in various different ways, depending on your Forex account. All right, so here's an example, guys, for the narrow focus versus the wide focus. There are 8 major currency pairs that traders can focus on, while in the stock universe, there are thousands. With only 8 economies to focus on, and since Forex is traded in pairs, traders will look for diverging and converging trends between the currencies to match up a Forex pair to trade. 8 currency pairs is a lot easier to keep up with than thousands of stocks, guys. You know, everybody talks about not putting your eggs in one basket. We are not telling you not to invest in the stock market, not to invest in cryptos, and not to diversify. What we are simply doing is breaking down the pros and cons between the two markets, telling you guys our viewpoints on why we think Forex trading overall is better and more lucrative than the stock market, but definitely diversify, guys. You definitely want to split things up and not have everything just in one place.
All right, guys. Hopefully that gave you guys a good breakdown on stocks versus Forex. In the near future, we are going to be getting into stocks and into options and bringing on another one of our trade partners and business partners that we're very excited about. But right now, our focus is Forex, just to kind of get you guys into the investing world, because as we said, it can be a much wider focus with stocks and sometimes a lot more long-term holds and trades. So Forex is just something that you guys may be able to start making profits on a lot sooner. So definitely would love for you guys to join us in our free signals and our free course, so you can be able to make a lot of these profits with us. Of course, disclaimer, can be able to, not will, because we are not financial advisors. We do not have any securities licenses, but every person can, as an individual, get into these markets and make a little bit of money. So
you could kind of compare us to like a coach, you know, a football coach, basketball coach. We are not guaranteeing that you're going to win games. We're not guaranteeing that by any means at all. But what we can say is that we will coach you and guide you in the right direction. That way you have a much higher probability of succeeding and winning. So hopefully you guys found some value in this video. This is part 7 of our 8-part series. Got one more video coming, so definitely be sure to check it out. Like, comment, subscribe, leave any feedback in the comment section below. Check out links in the description. Follow us on social media platforms, and definitely stay tuned. A lot more fire is coming, guys. Thanks for watching.